Hello, folks, and welcome back to this week's Forex commentary. And yeah, of course, this is Settle Black. So traditionally we always look at dollar index. But if you see the dollar index today, the dollar index is closed. At least here on my trading view. I don't know if it's because of I'm using the basic sub or no plan at all, and I'm not getting any price feed. But today is bank holiday. Everyone knows President Trump's inauguration into office, and I think the whole United States is just on hold to usher Trump into office. So there isn't so much we can do here, especially if we want to talk about price action going forward. Although we could say a bit of price action, but I don't have the luxury of markets open to validate anything. Okay, so we go off to the weekly time frame. On the weekly chart, this is where we are at. This is last week's trading, and this is the weekly bearish order block, the close of this fair value gap here that we've been eyeballing for quite a while now, and kind of like still anticipating prices to reach for that internal range objective. I must say again that on the macro perspective, there's been a shift in sentiment on dollar index, and because of that shift in sentiment, everything we've been doing since 3 weeks ago, okay, has been just looking at DXY as she trades from area to area, from one PD area to the next. Not just that, we're also being very, very nimble about price objectives. We are not being erratic about anything, because we know that at some point in the near term, we're going to see a near-term reversal on dollar index, depending on how prices unfold. And I really don't know how the market is going to unfold, but we are currently in a sell program, but that's what it is, sell program. But the market needs to price in at a certain premium before the sell program begins. Okay, and that's one of the things I was talking about in the previous commentaries when I was saying smart money would need to offset all of the longs that were accumulated here below this old low. They're going to offset it somewhere. Okay, and what we've been trying to do is we're trying to just blend in with the current distribution phase in the market. Okay, and for example, and that's why we talked heavy about correlated pair assets and intermarket analysis, because if you mirror pairs like USD/JPY, I've been trying to get up for a while now, USD/CHF, you would notice that these folks have clear buy side objective on the monthly time frame, and since they are correlated, and that seemed like the logical draw on liquidity, so it means that DXY is going to fund that move. So it means that we do not have a top yet on the dollar index, and all we did was look at DXY and try to look for a logical price target we can utilize to mimic the Swiss franc and Canadian dollar. Okay, so that being said, we haven't met our buy side objective on dollar index, and that's why we've been looking for higher dollar prices, and we'll continue to do so until invalidation is hit. Now, mind you, I said currently we're in a sub program, the COT hedging program, and we need to be very careful in environments like this. Okay. So a recap on last week's price action. I mean, this was last week's close. Okay. So if you look closely here, you see this price level here. This is the daily fair value gap, and also it's the inverted fair value gap here on this side. You can, if you look closely here, you'd see there was an old gap here. Recall this fair value gap we talked about 3 weeks ago, and I said I want to see DXY continue from here to attack buy side again, but you can see how prices ran through, closed below, and the only thing that was going through my mind was, okay, now that this happened, because my anticipation was to utilize this daily fair value gap. Okay, and they did this, and prices had some old weekly gap. I think I went over this last week's commentary, and you know, it wasn't until the markets closed again above this gap, making, you know, it was a potential support level, since they overlapped this down candle here. They closed below, making it you know, low probability, and you know, they closed above again. And you know, at this point, which was a Wednesday, I just told myself that there was no point in, you know, looking for trades again, because non-farm payroll was 2 weeks away, and you know, I wasn't really interested anymore. But last week we're looking at price action. We're very specific last week because we had a bullish opening range on dollar index here. Okay, we had a bullish opening range, and we wanted to see the markets continue off of you know, Monday's range on Tuesday. Okay, but then something happened. Dollar index never got into, okay, this is, we had buy side of the dollar index, that's 11020. If you recall the 11020 from the previous commentary, and 11042. But if you look at this high, it's 11017, which is about a 3.3 point, which was about 3 points shy of, you know, 11020. So, and you know, we had the dollar index reverse, although hitting, it doesn't really mean it got very close, hitting a buy side objective, not just on dollar index, on euro, which we're going to do the bulk of, you know, this presentation here. So if I switch over to the Euro USD, and if we go to the okay, let me just point out here, I wouldn't need to, okay, so let me take this out, and you know, just put this old high here. But someone should, you know, look closely. There's a fair value gap here. Okay, so that's also a detail you want to be looking forward to. Okay, so we had Euro USD hit, you know, run sell side here, hit the old weekly high here, and that really changed everything after the Monday's candle closed. Okay, because if we want to see a continuation, we shouldn't be seeing prices, you know, be bullish, despite the fact that it traded into a higher time from key level. What key level was this? Old high, support, whatever you call it. Okay, now if you check my Twitter account, because I actually talked about, you know, the potential Euro USD was bearish last week. You know, this day closed Monday, and I had to come online during the London session to, you know, to really talk about price action and see that based off of current price action data, right, something has changed. Okay, and I said explicitly a bullish close yesterday inside Friday's range isn't the daily time frame confirming protocol I was anticipating for a continuation low on Euro USD. Apparently, my thought process when I was making the commentary was I wanted to see Euro go lower, and we wanted to trade off of Friday's range. And Friday's range includes okay, this is Monday's range. So yeah, Monday's range, sorry, not Friday's range, Monday's range. And Monday's range includes Monday's high or within Monday's dealing range. And for me to be able to validate that expectation, Monday itself has to close bearish first. And we shouldn't be closing inside another candle, and especially hitting a high time frame objective. You know what I always say, when prices hit high time frame objective, you want to wait. Really, you just want to wait, because you have every opportunity then to remain calm so you can read price action better. Because when prices hit a high time frame target, like I always say, there's every likelihood prices return back into the range. And when markets return back into the range, obviously we are looking at, if we measure our daily range premium discount, we're looking at first the equilibrium price point of that daily range, because just above equilibrium is premium markets, right? So if markets hit equilibrium, then you can speculate that, okay, is there anything in premium? How is price action on lower time frame? Is it looking strongly bullish? Is it easy for markets to hit premium first or run back to discount? Okay, so that's how you ask questions when you're doing analysis. So that was the thought process, and there was no way I was seeing dollar index just trade off of this fair value gap. Okay, this fair value gap became low probability. Okay, and now mind you, low probability trading doesn't mean the markets won't move, doesn't mean there won't be expansion. Low probability is significantly hinged on your bias. Okay, if you have a bias to be bearish and the market is likely to trade opposite of your bias, that's low probability. Okay, and you want to avoid such trading conditions because you're likely to take a loss, you're likely to be wrong. Okay, that's what low probability means. It's not about if markets are whether the markets will move or whether the markets wouldn't move. That doesn't define low probability trading. Okay, so after that, on Tuesday, anticipating that it's going to be low probability, I also talked further about what price action is. I said something here. I said, notice prices took out sell side liquidity into a discount array. I mean, this is what we're talking about here. This is sell side liquidity here, and this is a discount array, an old high. Okay, that's a discount, and meaning there's every possibility that a short-term swing low forms here for a run into premium in this current daily range before prices resume its probable continuation. Then I said this is logic. Okay, so fine, you're bearish. It doesn't mean market isn't bearish. Okay, but looking at price action in daily time frame, that's why if you want day trade, okay, the secret to day trading is allow daily time frame validate your bias, then you have a low probability trading. And not just that, put your stops properly. I cannot say this enough, because if you want to beat the market, like you want to beat the market 10 out of 10 times, don't trade the intraday chart, because intraday charts, of course, they offer setups, day trading models, but if we're really talking about risk management and you're trading the intraday chart, then there's something wrong, because whatever range forms intraday, okay, those ranges might be very, 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 very valid for setups, but they don't define the invalidation levels of of setups. For example, I think after that I made a post here, I think here exactly, no, yeah, I made a post here. I said something here. I said look closely at Wednesday's settlement price, which means Wednesday's closing price. And with respect to Tuesday's range, okay, we're talking about this Wednesday. With respect to Tuesday's range, do you see the unwillingness to rally higher post CPI? And now prices are at discount. Okay, I was talking about how prices are unwilling to run high because, I was talking previously about how we ran prior sell side liquidity here into a discount, and talking about how this could be a potential short-term swing low, and markets could, run into premium. Okay, and I also said once that happens, we could now see prices resume a probable continuation. I mean, that's how to speak in probability. It doesn't mean you're afraid of any call and stuff. Okay, and that's why after I saw was this settlement price, we try into a premium. This defines premium. This defines discount. Okay, we traded into a premium market, and the market returned back into a discount below 50%. So that's showing us that the markets are willing to return back into the range first, and then probably continue the order flow, which was bearish in euro. Okay, so that being said, I was talking about what's the word, how the intraday time frame isn't a useful tool when you want to manage your stop loss, especially if you want to practice proper stop placement. Now if say we're bearish and we see this kind of thing form on Wednesday, and we can then assume that Wednesday has likely formed the high of the week. Quote, Wednesday has likely formed the high of the week. Now, if Wednesday has likely formed the high of the week, it then means that if you were trading on Thursday, the best place to actually manage your stop losses is at the high of the week. Now, nobody knows exactly if Wednesday formed the high of the week or not, but based off of what we see, we can make an assumption that, okay, I think Wednesday formed the high of the week. So if you want to trade on Thursday and you want to use ideal stop placement, or you want to trade on Friday and you want to use ideal stop placement, it only makes sense that your stop loss goes to the high of the week, because that's the reason why it's the high of the week. So whatever happened after the high of the week formed, you can rest assured, if your bias is sound and if you're right on bias, the market would never revisit the high of the week, because that's the whole point. It's the high of the week. And I'm saying this because in as much as there were periods during the call, folks took setups, and it's really made me happy, because for me personally, I have my own plan and the kind of things I want to see in price action, the kind of trades I want to be taking, because it's just like I'm going for a gun. I don't want to say something that would flag my video. Probably I'm going for an arrow contest, sorry, and I don't know, probably a paintball, and I just have just a few, or maybe one cartridge left, and I really want to win the game. So it means I would have to be very, not just precise, I have to be patient to wait for my target so that I can precisely strike. Okay, and not just that, I'd always prefer to trade in line with the high time frame bias, because trading in the opposite direction, which could also be the draw on liquidity anyways, sometimes they overlap, sometimes they do not. Okay, because at the start of the week, we're talking about prices potentially running into premium. Okay, so draw on liquidity was premium market on euro, but that's not the high time frame bias. You can see there's a significant discourse between what the draw or intra-week draw on liquidity is and what the high time frame bias is. And those kind of weeks are two-sided weeks. It's not the trending weeks, okay? It's the two-sided weeks. And that wasn't this is an example of two-sided week when I was talking about short-term trading commentary. For those who might be wondering what a two-sided week would look like, last week was very two-sided. Okay, so I was saying here that no feedback from PPI, so I wait still. Now then I went forward and said that this is how I have managed to avoid a low probability trading day, saving me a couple $100 of trading capital and as well as mental capital. Okay, now if I'm trading against the high time from buys, and I probably engage from this fair value gap here on the 4 hour time frame, probably manage my stops here, which would be proper stop placement. Okay, because I would not be interested in whatever the intraday chart has to say. Okay, all of this consolidation, I would not be interested, because how do I get in on a setup here on the lower time frame and begin to see this, and I know fully well that I'm on a bias which is bearish, and markets begin to consolidate like this. And when I was waiting for PPI, I expected prices, okay, because I uploaded this chart prior. I was eyeballing this 2-hour fair value gap. Okay, I wanted to see prices run through relatively equal highs into this fair value gap. Okay, although I was eyeballing here, but one PD array at a time. I don't need to overstretch objectives, because like I said, I'm trading against the high time from bias, so I have to be very, very nimble about what I pick, nimble about my expectations. Okay, so imagine getting in on a setup here, not even talking about going in on lower time frame 5-minute market structure shift. I'm talking about actually executing off of this 4-hour fair value gap and placing my stops here, and I'm seeing all of this. There's every tendency that after this happen, post PPI, I would probably just collapse the trade, not because the trade doesn't have any potential to reach it, but because I'm already exhausted, and everything within me has been trained to not trade against the high time frame buys, not draw on liquidity, high time frame buys. And there are times when I can, and me trading against the high time frame buys just solely depends on me. Okay, but I would be easily mentally depleted doing that, especially if price action are not giving me instant feedback like this. Okay, so that's why most of the time I just simply avoid it altogether. So basically that was that for PPI. Talking about my expectation after talking about how markets could run into a premium. So obviously I wanted to see PPI run into the 12 fair value gap, and after that we had a very solid swing point from on daily chart, and then it validated CPI to run into even more premium markets. I mean, this was the end result, and after that we saw markets run here, which was beautiful. And I started talking about the open, high, low and close of candlesticks and their relationship with dealing ranges. Are you a premium? Are we at discount? Did we run our sell side liquidity, if you're referencing key levels? After taking sell side, how did the candles close? I mean, this is how you want to be reading price action. Basically what I was saying. I mean, this whole week was really, really fascinating, because we went through price action together. We talked about prices in great detail, and I also was talking about several other things this week. Okay, ranging from psychology, to a little bit of philosophy, and I really want to be doing less of that, because my goal is not to indoctrinate anybody into the things I believe in. Okay, I'm not trying to force anything on anybody. Okay, you can believe what you want to believe. At least everyone should know I'm a Christian, and that's why I have it here, ambassador for Jesus Christ. All right, so that's an entirely different thing. Okay, but I want to stick with my message, which is only talk about price action. Always just talk about price action. All right, and that's the way to go, really. And I would not need to just post an empty chart and wait for everyone to comment and wait for the markets to play out and now say, well, my bias was what the market was. Then that's not good enough, really. And that's the kind of things we see around today on Twitter. Okay, so enough of the recap. And now this is current price action, and you see DXY is closed, but you can see how we are in a consolidation again, which is terrible. Okay, it's really, really terrible. Personally, I wanted to see Euro USD open and just going to give us range, very healthy price range in line with the high time frame bias. I mean, there is this fair value gap here. There's this fair value gap here, and this is now a concern because previously I would care less what happens to this fair value gap because we are under bias last week, and the markets established that bias on Friday with the run above this high, and and if you measure from here to here, the markets return into equilibrium, the 50% of the range. Okay, so this is equilibrium of the range, and you can see we have long wicks here. Okay, you can see this wick, the swing low here as the rejection block. So it only means that if market returns back into Friday's range, we want to see them trade into discount. And what's discount? You can see 61.8% here, and you can see the bodies of this candle. And in my mind, I'm like, if that happens and we see markets trade, of course, below this old daily fair value gap here, and the candle closes below this fair value gap, and we are now in discount, it now validates more reason why we could see prices hit objective, which okay, yeah, that's the weekly time frame. The midpoint of the old weekly fair value gap. Okay, so basically with the opening of today, low probability US election, especially if you want to trade intraday. Okay, low probability US election. So if I want to look at Euro USD, honestly, this high should be the new invalidation because we traded below previous high, making this level high resistance liquidity run, right? And we have a draw on liquidity here, which is this rejection block. So it only makes sense that the markets respect Friday's high. Trust me, a run through Friday's high, I don't think I can be bearish on euro. Okay, I just moved to the sidelines. Okay, it means like I said, to note, dollar index is now bearish if we're referring to the COT hedging program, and we have to be very, very careful. Now, talking about COT hedging program, this is barchart.com, and this is where we get the COT data. And look here, we're looking for dollar index. Okay, and we're looking for the delivery month of March because it's going to be dollar index is we're going to be pulling up a futures chart on dollar index, and okay, we need network is quite terrible, but I'm gonna wait. I'm gonna stick around. I'm gonna wait. So we want to pull up dollar index on barchart.com, and we want to apply the COT data. Okay, and probably down the line at some point I'm going to amplify the lesson on the COT Asian program. I'm waiting for this chart to come up. What's going on? I mean, pre-market currently is wild. Pre-market is currently wild with foreign currencies. I mean, look at this stock consolidation and okay, I'm sorry, I cannot continue waiting for okay, let's try this. Okay, we're gonna pull up an interactive chart. I saw the dollar index. This is delivery month of March 2025. Okay, and this is the code DXH. H signifies March. Okay, for this futures contract. Okay, probably because it's been a while since I used barchart.com, and they have all of their trading, and I don't know, it just seemed very new to me. So first we want to change this to candlesticks, open to close first. And okay, this is the daily chart on DXY. We take out volume, that's volume, and we want to pull up it's not symbol, it's not indicate, it's not indicators. I'm really trying to remember, Jesus Christ, because I use a tool on TradingView, but I'm trying to find. Oh damn. So I don't think I can find what I'm looking for. I think I'm supposed to find study somewhere here, but I do not see it here, and I don't know. I do not see it here, and maybe I'd have to log in or something, but it's pretty not important. So we'd have to go here, and we can just pull up the so this is the COT hedging program, okay, and you can see we are currently below the net zero line, and this is currently bearish for dollar, and this was periods when we were bullish on the XY. So you can see DXY has been bullish since here, and this was for periods when we were bearish on dollar index. So I mean, enough said in this week's commentary, because what we're anticipating here is a continuation on dollar index, and currently pre-markets on foreign currencies are looking very bearish. I think it's because dollar index isn't open, so they are doing whatever they want to do on the other side, being very, very manipulative there. So so we just wait for DXY to open tomorrow, and we're gonna see how dollar index trades. But for this week, my anticipation is that prices run through this hike here into the 110.426 level. Okay, this is the draw on liquidity for me this week, and this is everything I'll be anticipating in this coming trading day. Okay, so until next time, I hope be safe. Really exhausted.